Hey guys, you've joined us on Moneycontrol Live and I'm Manisha Gupta. We're looking at the crude oil prices which are trading at a 5-week close. We've seen 5% of a decline in the crude oil prices in the overnight markets, and it's not just the crude oil prices but heating oil, gasoline, natural gas, almost everything declined anywhere between 4 to 6% overnight. The Asian markets, remember, have had lower liquidity because China is out on Golden Week holidays. So we are looking at lesser liquidity and the price is not moving too much here. Europe as well has seen a bit of a buying come in for crude, but not so much, and we still are trading at around 71 for the WTI and 75 for the Brent crude oil prices. Well, the US politicians, as we believe, are discussing ways to avoid debt default. That deadline comes in on 1st of June, and every time we do see that some or the other decision or solution is arrived at by the 11th hour, and that may happen this time as well. But with the kind of slowdown growth that we are looking at, recession concerns in US and Europe and China not coming back as strong as many investors would have liked to believe, is what is weighing onto the markets as well. And even as the OPEC and allies are looking at output cuts starting from the month of May until December, we have seen Iran actually increase output, surpassing 3 million barrels per day. This was nearly 2.1 million in 2021. So last couple of years have been quite strong in that sense there. So higher supplies, not so much demand, weaker economic data is all weighing onto the markets here. And then it is about the expectation of a rate hike from the US Fed when that meeting happens today. On top of our Reserve Bank of Australia also increasing 25 basis points. That happened today as well. The markets will watch out for the European Central Bank monetary policy meeting. That happens on Thursday. So it's going to be a loaded next couple of weeks as well for the crude oil prices. Well, let me tell you that the crude volatility has been on the higher side. Last year, remember, we saw 14-year highs on the crude oil prices. We hit a high of $140 a barrel, even for a very short time there for the Brent prices. But the last year closed in on at $76 a barrel, all the way down from $140 of a high there. Now, this year, until now, in the first quarter, we've seen a range of 70 on the lower side to 88 on the higher side. So it's been an $18 of a range for the crude prices. With 75 currently, we are trading at the lower side of the range. With the kind of maths we are doing in sense of demand and supply and the rate hike calculations going forward, most investors would like to believe that $80 is a more fair price for Brent rather than the current 75 that we are looking at. So with the kind of sell-off that we are looking right now, you could be looking at $2 or $3 of a decline even from here. But the fair value for the prices and where you will see eventually the markets come up is at around $80 per barrel for the Brent prices, and that's exactly what the street is anticipating.